What's happening, y'all? It's Mike the Money Motivator, man. Just like every week, man, I'm gonna give y'all some swing trade setups, give you some swing trade plays. Um, the last 2 weeks, I also did like a trading journal. So I'm gonna add a little bit of that into this. Usually I do it on separate videos, but at the end, after I give you the swing trade plays, just in case you came just for the swing trade plays and the swing trade education, after that, I'm gonna go over my trading journal and how my trading week went. Um, just to show y'all briefly, you know what I'm saying. Remember last week I was down on my trading week, but I did a little better. I did a little better this week. And we gonna keep the ball rolling. Also, on top of that, I'm gonna also give y'all like, you know what I'm saying, get y'all some like plays or whatever. But this how my trading week went last week. I was up. What's that? 5 days. See, I did 6 trades last week and was profitable on 5 of them. And later on, I'm gonna explain that big drop. You know what I'm saying? That big drop and that big gain that was on the same day. Um, so that was a big profit in order for me to recover some losses and still make profit. So it was a green week, 5 trades up out of 6. Much better week than I had, much better than I had the week before. But without further ado, man, let's start off with the fear and greed index. Let's see how the fear and greed index is doing. All right. So the fear and greed index is fearful. Y'all know what I always say. You want to be greedy when others are fearful and fearful when others are greedy. But when Trump is president, you don't know what's going to happen. You don't know if the market is going from fearful to greedy or from fearful to extreme fear. But what we do know is that we were at about 19 in extreme fear a week ago, and we're up to 35. So at least in regards to fear, the market is less fearful after last week, which makes sense. The market was, you know what I'm saying, going up or whatever. Oh, my bad. I even skipped a step. I even skipped a step. Y'all forgive me for that. So I'm gonna review. I'm gonna review my swing trades from last week. I didn't take any of the swing trades, but we're gonna see how they look and pull them up on a chart. Right? What we on? What at episode 27? Yeah. All right. So we're gonna pull up last week's swing trades and see what they look at. What is that? Whatever. Whatever this company is, I don't know what they do. So we got to look at their financials. Mainly like the 4 hour daily and weekly, but the daily time frame has off of blurry. I could barely even see the companies. Just based off a chart only. Okay. I like the way the chart look, but the financial cancels that as a. Okay, so I canceled that one. All right. Swing trade. A pattern ish. I hate when that have higher volume. That's more participants in the price action. Best Buy. So it's above the 9-day moving average. It looked like it could be a double bottom. I'm not really. All right, so we got Best Buy. So y'all take a little look at that over to the right. Okay, what else though? I know it wasn't just Best Buy. I kind of got this like marked up with levels or whatever, but with Exxon Mobil, the reason Best Buy, Exxon. I know I at least gave 3. and Target. All right, so it looked like I gave 3 plays last week. Best Buy, Exxon, and Target. So let's look at the plays from last week. Let's see how those did. Uh, Best Buy. Nice. Nice. Y'all can see, man, I'm calling them and then going over them every week. So you know I ain't playing with you. I'm calling them and going over them every week. So I ain't playing with you. So if you go back 5 days, right? Last week was a 5-day week. That's 1, 2, 3, 4, 5. You could have held that trade the whole week and you would have been profitable for Best Buy. Hold on, my bad. I ain't pulled a chart up for y'all. So whenever I do a swing trade, you count 5 candlesticks backwards, right? Whenever on the day that I'm reviewing it, right? Because if I review it on a Sunday and then I'm looking at it again on the next week, you go 5 candlestick backwards. So that's 1, 2, 3, 4, 5, which means this green candle right here was where we were at when I called the swing trade play. So Best Buy was a go. So far, we 1-0. Let's see what Exxon did. Exxon Mobil. Exxon Mobil was up too. Let's see how soon it would have been up though. I'm not trying to take credit for it was up over the whole week. I like for my swing trade plays to be up the next day or two, like instant up. So if this wasn't an immediate up, I ain't gonna say it counted. You know what I'm saying? 1, 2, 3, 4, 5. So yeah, I mean, I guess I could say I counted because you know what I'm saying. The next day it ended up down, but the second day it was up. I don't know. I'm gonna give Exxon an iffy. I mean, if you did swing trade it for 2 days, it would have been profitable, but um, it's iffy. I'm not in love. I'm not in love with it. I know just by looking at it out, that's not a trade I would have got into. I would have missed out on the profits on that one. Let's see. I'll go back 5 days. 1, 2, 3, 4, 5. And Target, you would have been up on Target. Target would have been a nice swing trade to hold for a day or two and jump out. So it looks like all of my trade recommendations hit. Okay, so I had a nice call for last week on a swing trade setup. I had a nice weekend of trading. We're gonna go over that at the end. And now we're gonna get into some possible plays. So these first two is more like case study type stuff. Like before I get into that, my bad, y'all. I'm skipping steps. So we hit the fear and greed index. Let's look what the news is talking about. Let's see if the news is good or bad. All right. Seeing hikes U.S. prices as much as ahead of tariff increase. That seems like bad news. Trump's poll decline. That seems like bad news. America's market exceptionalism isn't coming back. I'm getting bad news vibe from the newsletters. Vancouver car strike that killed. I'm getting bad news vibes, y'all. So the fear and greed index says that the market has went up last week. That's obvious. The news is giving me bad vibes. But let's look at the VIX and the total stock market index to see what's really happening. So let me go to the chart. All right, the VIX, and the VIX is the volatility index. It moves inverse to the stock market, right? Based on the VIX, if y'all remember, like I told y'all before, when the VIX makes a very large spike, the market usually goes up pretty hard after that. And a large spike is usually the market going down a lot. As y'all could see in 2024, in December of 2024, we had a really large VIX spike. I think that was just in one day. The market dropped like crazy. I remember I was in a swing trade on that day and lost, lost money on that one. But when you notice these VIX making these big spikes, usually the market goes up hard after that. Usually. So looking at the trend on the VIX and comparing it to the MACD indicator, that gives me the idea that the market will continue its trend going up. Based on the economy is fearful. I feel like people have a reason to be fearful. So over the longer trend, I expect the stock market to probably continue to go down a little bit. But I ain't got no glass ball. Only thing I could do is have my best opinion on what's gonna happen next week. Um, so without further ado, I'm gonna pull out the charts. This first one is gonna be more like a case study, you know what I'm saying, for you to look at, review it, see if you confirm that it's a nice setup. But the reason why I say case study because this company's financials were trash. So do not, under any circumstance, trade this stock. But it's more like a case study, you know what I'm saying? Something for you to look at. Let me make sure you can see what I'm talking about. So I kind of liked the setup ish, you know what I'm saying? Only based off of two things. I really like my setup to be off of three different things, and I like this setup kind of off of, you know what I'm saying, off of two things. Now this is what Churchill Downs. Don't know what this company does. Don't know too much about them. You do want to know if your company is profitable, and this company has not been profitable. But more case study like what I did like about it is that it is outside of the Bollinger Band. You know what I'm saying? The Bollinger Band is up here and we're down here. So we're outside of the Bollinger Band. Usually when a stock goes outside of the Bollinger Band, it doesn't stay out too long. As you can see back here, it makes its way back into the Bollinger Band, right? So we're outside of the Bollinger Band with a hammer candle. So, I mean, it's not the, you know what I'm saying? It's not the best, but it's not the best, but it's decent. And I'm gonna go over the hammer candlestick with y'all. Um, just like I always do, you know what I'm saying? I'm gonna make sure I'm you know, giving you education instead of just plays, you know what I'm saying? So here on Investopedia, hammer candlestick, right? And the hammer candlestick is a bullish reversal candle that a downtrend. It has a small body at the top and a long wick below. It's a reversal candle at the bottom of a downtrend, right? So, based on it being outside of the Bollinger Band, based on it being at the bottom of a downtrend and a hammer candle, I like the setup, but I would not swing trade it. Just to be honest, because their financials aren't great, and this MACD is still giving me possibility of more downward trend. So it could probably go up, but I don't think it's worth putting your money into a swing trade on that. So that's just more a case study, more something for you to look at. Probably see if it goes tomorrow or not. But I got four plays. I got four, oh no, five. I got five plays for y'all Dang, I don't ever be having that many. And I think one of them is one of the plays from last week, to be real. So the first one we gonna hit is Target. And when I'm done with them, I'll let y'all know which one is my favorite. Um, so Target, I liked on the daily time frame. If you make it bigger, it's kind of giving double bottom vibes. You know what I'm saying? Target is giving me double bottom vibes. It's already broke the neckline, which the neckline, you know what I'm saying, is really right here. Let me make that a little thicker so y'all can see. I know I'll be losing y'all sometime. Boom. So that would be the neckline of the double bottom. If you really wanted to be safe, you could even consider that the neckline of the double bottom. But if you wanted to trade this double bottom, you know what I'm saying? We are above the 9-day moving average. It does look like we possibly broke the neckline. The 9-day moving average is starting to slope up, and the MACD is green, which is giving me a good idea that Target could still go in the upward direction. Um, I do like that we also have this gap right here. You know what I'm saying? The stock doesn't always fill gaps because the stock market goes up over the long period of time. It's almost guaranteed that that gap will get filled at some point. Um, but I don't like trading off of gaps. But I do like the fact that, okay, well, if I'm planning on trading this or swinging it to the upside, there's a gap there that the stock probably wants to close, right? So on top of that, the MACD is green on all of those time frames. It's not with all this line shit. MACD is green on all of the time frames. So I feel pretty good about Target going up. Also, if you know anything about price cycles, usually there's a direction after consolidation, right? So if you looking at this is all consolidation. The price is really moving from this zone up here, 97.97 to really 88.69. And the price for looks like 3 to 4 days has really stayed within that zone. That's consolidation. And usually after consolidation, there's a breakout. You can't really confirm which way that it's gonna break out, but based on the way this looks, it looks like the breakout is gonna be to the upside. So Target was one for last week, and I like Target this week again. Let's go to the next stock. The next stock I like for next week is Walmart. All right. So Walmart, let's look at Walmart on the 4 hour. Hold on, let me pull up the chart. Look at Walmart on the 4 hour. So Walmart is trending upwards. What make me a little nervous about this is that the MACD is literally look like it's about to cross down. But it's trending upwards and it's above the 200-day moving average. So it has bullish momentum. Um, I see why I kind of liked Walmart. So Walmart looks like it's giving bull flag vibes, right? But you run the risk of, because you got two tops right here, you run the risk of it being a double top instead of a bull flag, right? Now it looks more like it could be a double top than a bull flag. And remember, patterns don't always got to be perfect, but if we're leaning closer to perfection, Walmart looks like it's probably giving me double top vibes over bull flag vibes. But I could see why I liked it as a consideration. So if we gonna go Walmart over Walmart and Target, I like Target better than Walmart. I like Target better than Walmart. Um, all right, I got three more. I got three more. So the next two are literally like um the next two are literally like competitors. So this don't look all that it's not all that perfect. I did like the fact that we were above the 9-day moving average. And the reason why I'm showing you Home Depot first, the next one is going to be Lowe's, but the reason why I'm showing you Home Depot first is because Home Depot I also have less faith in, but I like Lowe's setup a lot better. Um, so Lowe's is one of the last two, and the last two are my favorite two setups. So Home Depot, we got the MACD in green territory, look like it could still go up, and we're above the 9. I slick kind of I slick kind of felt like it was giving me head and shoulder vibes, but I also don't feel like, you should be questioning a pattern. You know what I'm saying? Like, or you be looking at patterns all day, you want to make stuff up in your head. You know what I'm saying? Like this what I was thinking. So we got like a shoulder right here and a shoulder right here. You know what I'm saying? So I was thinking shoulder, shoulder, head. So if you see this, you know what I'm saying, confirm, let me know how you feel about this being a head and shoulders pattern. You know what I'm saying? A head and shoulders pattern, I would say the neckline, you know what I'm saying, to be real, the neckline could be right there. If you really wanted to be safe, you could say the neckline. That's too far off to be a neckline, but we'll say the neckline is right there on an inverse head and shoulders. Let me pull that pattern up just in case you don't know what the pattern is. And then y'all could let me know in the comments if it is really an inverse head and shoulders. Like I said, the patterns ain't always got to be perfect, but you don't want to be making up stuff in your head neither. Like, you know what I'm saying? Oh, this look like, nah. Is it for real or is it not? You know what I'm saying? So I hope y'all was watching what I was doing, but if y'all wasn't, we got on a daily time frame Home Depot, we got it coming down, going up, going down further, and then coming down a little more, looking like a possible head and shoulders pattern, right? So I'm gonna pull up the head and shoulders pattern for real, the inverse shoulders, same as the head and shoulders pattern, but it's just flipped upside down. So I wish we could pull it up like side by side so you could really see, but take a look at the inverse head and shoulders. It's not confirmed until it breaks a neckline. If you really want to be safe, you wait for it to come back down for the retest. But if you look at that and then go back and look at Home Depot, you can see where I was coming from with that. So just based off of the possible inverse head and shoulders, on top of that too, if you look further to the right, we do have if you look all the way to the right where this arrow is over here, we do have a double bottom pattern, right? So that double bottom pattern has already broke the neckline. Usually after it break the neckline, it goes, but it looks like there's been a little stall. So the iffy inverse head and shoulders, for sure, double bottom. So we kind of got like two patterns in one. I see why I like Home Depot for the swing trade this week. Um, Now I got two more. Like I said, the next one is a competitor to Home Depot, and that's Lowe's. So Lowe's on the daily time frame, I like a lot better. One, I like it because the last candle was a hammer candle. Hammer candle usually is pushing off for something. So let's see if this is actually a level of support. Like what pushed this last hammer candle up? Uh-oh. We might have found a level of support on Lowe's. It bounced down from here. And if you go back like 2, 3 weeks, it bounced from there again. Let's go back even further. Looked like it bounced in the area, but not really touching it. It did bounce off of it over here. It did touch it over here. So it's hitting that level on both sides. Not every time, of course, but it's hitting that level on both sides. So Lowe's did touch a level of resistance on the last day, and it's a hammer candle. But the main reason why I like Lowe's is because Lowe's, out of all the double bottoms that we've seen, Lowe's is giving me a clear double bottom with a neckline right at about a little over $223. So if Lowe's on Monday goes over 223, nice call option. Go ahead and nice swing trade. Go ahead, jump in it. At least hold it for 2 days, or hold it till Tuesday morning before getting out of the trade. And now we're gonna go down to the last one, which is Tesla. So Tesla has already broke in the double bottom. Now with Tesla, I would say it's probably more of a momentum play. In the news, they've been talking about him not really participating with Doge anymore. Let me pull up the chart. I hate when I go back to make sure I'm looking at the chart and ain't even no chart up. All right, there we go. All right, so with Tesla, we look like we already broke a double bottom, right? We look like we already broke a double bottom. We have strong momentum going up. So I kind of like Tesla on a momentum play. What I don't like about Tesla is on both the RSI and the price action, we're like high in regards to the Bollinger Band. So Tesla is not one of my favorite. Tesla is not one of my favorite plays either. I like I like um I like Lowe's a lot better than Tesla. But those are my swing trade plays for next week. Um, those are my swing trade plays for next week. Now I'm gonna go ahead and get into one of the plays I want to talk about. Earlier in the video, I talked about my week. So I'm gonna just throw this at the end since I already finished swing trade Sunday. That's now done. I'm gonna talk about my previous week. As you can see, I was green on my previous week after losing somewhere around $70. I'm up on a total for the past 2 weeks. Hopefully, I keep that same momentum. I like that I hit 5 out of 6 on last week. Um, one of each time I teach a lesson, each time I teach a lesson when I go over my trading journal or whatever, and one lesson is going to be similar to last week, because I know last week I did that trading the other side of the V. Again, I did trading that other side of the V again. So I'm gonna reiterate how that's what I'm saying, how that's been working, but I also want to talk about a lesson, right? So trading the other side of the V, as you can see with Tesla on a 2-minute time frame. When you're trading the other side of the V, you got to be careful because a retest level is about right here, right? That is where if this green candle was to come up to this, let me make sure we're looking at the same thing. Okay. So a retest level is about right here. You know what I'm saying? You could even say right here, right? Anywhere in that area is like a retest level. It could even be lower than that level. But when a stock is going down like that, you want to wait for it to at least pass that retest level, right? And that's a good entry to get in. Now, one thing you have to monitor is that once you get to that peak, which is this next green line I just put up there, once you get to that peak, you got to be aware of it possibly doing a double top. But if it clears that peak, then it goes with high velocity. You know what I'm saying? So you could have got in a trade here. You could have gotten a trade even lower. You know what I'm saying? Set a closer stop loss. But if you get in the trade after it done broke, you know what I'm saying, that top, ride it until it crosses the, what is that, the 9 day. It's either the 20-day moving average or the 9 day, but whatever this orange line that I got right here, which is usually the closer one. So it might be the 9 day moving average. So if you were to trade the other side of the V, as this is coming down, right? You see over here where it's coming down, and now we got a V. The V is now turning. You want to look at volume, these bars on the bottom, to see if you got participation with you. You know what I'm saying? Right here, you got a big green volume bar with it already passing, the other side of the V level and it being above the 9 day moving average. So right here would have been perfect entry. And you just use the 9 day moving average as an exit. So like over here, it looked like it came below the 9 day a little bit, but then popped back up. So you could have got out right there if you was a little scared. Um, you could have got out right here where it actually closed below it. You know what I mean? Or if you would have held even longer, which I probably wouldn't have did. I trade safer than that. But if you were to hold the trade a little bit longer, probably for the rest of the day, you would have been up. So that was another that was me just reiterating the other side of the V trade like I did last week. That's something that I pay attention a lot to. Either the other side of the V or retests. So if you have a level or a moving average or something like that, a lot of the time when it breaks, one, if it breaks, you want that candle to finish first because it might just make a wick on you when you be done. But two, the safest trades are on the retest, is what I've learned. The safest trades are on the retest. Wait for the stock to come back to you, whether that's the VWAP, 90-day moving average, trend line, support level, whatever it is. Wait for the stock to come back to you and then go in its proper direction. You know what I'm saying? But it looks like last week was it. My swing trades were on point and I was up for the week on the market. So if you do these swing trades or not, just use it as education, case study, whatever, you know what I'm saying? Write them in your books. If I said something you're not familiar with, go back and study it. But do your due diligence. Don't jump in a swing trade just because I said so. You know what I'm saying? Make sure it's legit. Oh, also, I wanted to, before I go, I wanted to talk to y'all about Friday. I don't know if you noticed on my week, the one trade that I lost, I broke one of my rules. Broke two of my rules actually. So on that trade that I lost, the first rule I broke is that I went too heavy on a trade. You know what I'm saying? And Friday, I kind of get excited on Fridays because you could buy more contracts with the same amount of money because the expiration date is the same date. So on Friday, I'd be excited. So I was kind of hyped and I bought more contracts than I would have, right? So that was the first mistake. The second mistake was from the time the market opened, I knew that it was a very wicky day, right? And when I say wicky day, I mean, usually the stock market, if you trade long enough, you kind of know a even, flow of the candlestick. But when you looking at that chart and it's red 1 minute, then green 1 minute, and then it just turns into a wick, and the candle action is just too fast. That's a wiki day. One on those days, you either don't want to trade or you want to go light, right? So I went too heavy on that day. That was my first problem. The good thing that I did was I did not go too heavy where I didn't have enough to trade. So the reason why I was able to flip, a loss that ideally, to be honest, on a wiki day, it's easy to take a loss as large as what I did. I want to say that loss, what I'm saying, on $1,000 account was probably 200 something dollars. That's a big percentage of $1,000. So when I made this big return, it, what I'm saying, afterwards it accounted for it. So those are two strong reasons. That's the main lesson for my trading journal or trading diary for this week, is to not use all your profits because you don't want to lose all your profit. But also, in the event that you see something nice that you need to jump into on the same day to regain your profits, then you still got that money to recoup those losses. So I turned success into a mistake that I made on a wiki day. I get excited on Friday, and Friday was a dangerous day to trade. So, what I'm saying, it put things into perspective for me for a little bit, but it also, what I'm saying, I also, reflect, and I was like, okay, that's what I did wrong, but at least I did this, so I could have fixed it. So yeah, this week I was what, I mean, five and one. I did six trades. Every day I did a trade, but Friday I did two. So I was 5-1 for last week, a way better average than the week before. The week before, I think I was 3-2. So far my averages on win trades are good, man. I'm gonna start coming out with courses. If you got something you want me to review or give y'all education on, whatever it is, just holler at me. You know what I'm saying? I'll get in the studio and put something together or whatever to help you become a profitable trader. But until next time, like and subscribe.